Into it shortly after. Hi, Jill. Good morning.
Hello.
Okay, great. We had a slight technical issue earlier, but I guess I'll just hand over to you, and then you introduce the rest of the members of the panel, and we'll get on with it. Good luck with the session. Thank you.
Thank you.
Lagos.
Hello. Good afternoon, everyone. It's such a pleasure to be here in this panel today with my esteemed colleagues from Global Impact Fintech. I would like to say a couple of words as a chairwoman of Global Impact Fintech. First of all, my sincere appreciation to Digital PayExpo for this partnership and for providing such a valuable platform to advance the conversations that are extremely important for Africa and not only Africa these days. As a chairwoman of GIFT, I'm deeply proud of our mission to connect fintech innovations, regulators, policymakers, and impact-driven leaders across emerging markets, fostering collaborations and responsible innovation and inclusivity. That's why today we are part of this panel and interesting discussion on the topic of fintech and international remittances. With the traditional banking system, often with high costs, slow processing time, and limited accessibility, fintech solutions are bridging the gap of offering faster, cheaper, and more inclusive alternatives. Remittances remain critical for many African economies. Today, we will deep dive into the challenges from regulatory perspective, currency exchange, and the future of interoperable payment systems in boosting intra-African and international commerce. I'm joined today by esteemed colleagues from GIFT. I would like them to give chance to introduce themselves and briefly to say how they are connected to the topic. After that, we will deep dive into the questions, and we will be taking questions from the audience, both online and also offsite. Please be ready, send us in the chat or ask the question on the audience. With that, I would like to open and ask Sahana to start the introductions. Thank you.
Thank you very much, Jill. I'm very excited to be here, and thanks for the invitation. My name is Sahana Arun Kumar, and I have been working in the digital and financial inclusion space now for over 17 years, and a lot of it is on Africa and globally on emerging market dynamics. And so, you start talking about payments, you start talking about livelihoods, and very quickly you start talking about remittance. So this topic is very close to my heart. I started as a banker during the subprime crisis. We started to innovate, to downscale with technology to reach a lower income population. And from there, and along with the push from the Sustainable Development Goals and the public and private sector partnerships, there is much that has been done, much left to be done. So I'm excited to join the conversation today. I head Amarante Consulting, and we work in these thematics of flows, innovation, and digitization in emerging markets. Thank you very much.
Thank you, Sahana. Mr. Olufemi.
Thank you very much. Good to be here. My name is Femi Oyenuga. Quite interesting topic that cuts across the DNA of Africa, remittances and digital space. I've been around this space for 25 years. I currently work in Charms as one of the people changing the landscape of fintech and digital accomplishments in Africa. What is Charms? Charms Old Co has got a bank in it. It's got a fintech platform. It's got a mobile banking infrastructure. It's got a switching platform, as well as the opportunity to print cards through identity, digital identity, and many, many other things as well. Before then, I've done some work in Oracle, MTN. So I've got some plethora, polymorph of skill set across 7 industries. I'm happy to be here, and I sit on a lot of digital boards as well. Thank you very much.
Thank you very much. And moving to Mr. Vijak.
Okay, สวัสดีครับ That's a Thai word for hello. And my name is Dr. Vijak Sethaput. I am working at the Thailand Central Bank, which is the Bank of Thailand. I got involved with the central bank digital currency in 2019, working on as a senior developer for Project Internon, which is our wholesale CBDC. And that project Internon has gone to connect with Hong Kong in Internon Land Rock, and now become the project named Mbridge, which I'm working now at the moment. And about 2 years ago, I have a short stint to work in National ITMX, which is our operator for instant payment named PromptPay. And when I was working there, we have maybe the first pair of the instant payment connection with the PromptPay Pay Now in Singapore to do this cross-border kind of thing. So I have a lot of experience working on the system, connect the systems cross-border. So this is a very interesting topic. Thank you.
Thank you very much. I think we have wonderful collective experience here on this panel, very different from each other, but also so much learnings. I would like to kick off conversation with Sahana. Sahana, what emerging fintech innovations show the most promise for reducing remittance costs from your perspective?
Thank you for the question, Jill. I mean, I think overall in the African continent, we have seen, the advent of mobile money over a decade ago, and how that reduces costs, and how it fluidifies, transfer of money from person to person. We've seen that more on a domestic play, right? And we have seen a certain corridors that start working with mobile money to reduce costs internationally as well. I think the most compelling, innovation for me is the hybrid model that mixes a bit, stablecoin rails to be able to access international remittance coming in from outside the continent, especially from diaspora, into the continent, but then leveraging mobile money front-end rails, so that actually the end customer who's receiving the money doesn't really look at the complexities. It stays as mobile money experience for the person, but it allows diaspora to send money, reducing costs significantly. If we're talking about 6 to 7% cost for traditional remittance, they're able to reduce it to 1 to 3%. And sometimes even at zero cost, depending on, economies of scale. So this for me is revolutionary, disrupts the market a little bit, but doesn't really have to change adoption and behavior at the recipient level. It's interesting to see how the momentum will carry on, because obviously there are incumbent actors as well that are innovating in this space. And I think also something else that will push the momentum is the Africa free trade momentum, where focuses on micro businesses, focuses on how trade can happen more seamlessly. And we talk about cross-border trade, we talk about payments cross-border, right, or a remittance. So it will also be very interesting to see how some of the traditional players like PAPS, like MFS Africa, and there are also others that are coming in, regulators that are joining forces. And the last point I would like to make is less of a technology, but I think momentum we're seeing in breaking some of the silos between governments, between ministries within a country, but also cross-border ministerial dialogue, central banks getting together, development actors convening together to, have this dialogue happen, I think is cherry on the cake, and hopefully it will bring more momentum and more innovation and adoption.
Yeah, it's so interesting, Sahana. You touched on a couple of so important points. I've been in payments last 15 years, and now we see this shift of mindset that everybody coming together, and also regulators are open to learn, and it's a approach that is driven by learning together and getting things done and solutions that work on local use cases. And I think Bank of Thailand is doing a lot of that, especially on instant payment. You mentioned also the Enbridge project, CBDCs. What do you think Thailand best practices? Where do you think African can benefit? And what are the best learnings you would think applicable to this problem in Africa?
Yes, I agree with the previous speaker that this problem actually needs a lot of collaboration because from our experience, we would have not be able to do what we did without the help of the regulator, with the help of the government kind of thing. The main lesson that we learned is we have to get everyone together and try to kind of help each other going through not only the technical part of the problem, also the business part, business model, and how to handle the cross currency settlement and all that thing, which cannot be done without the help or the collaboration of all the parties involved. From the lesson that we learned, for example, the prompt pay now that we have done a couple of years back, and we try to scale that to many other countries, but we're using the kind of the same methodology, which is bilateral negotiation or bilateral country to country. And we found that model doesn't work well because it takes a lot of time to do all this synchronization, harmonization of all the API call and things like that. So I think 2 years ago, we have done the project with BIS that called Nexus, which is multilateral. So we kind of build the system in the middle and like a hub, and then all the countries that want to do this cross-border kind of instant payment connection just connect to the hub, and then the hub will take care of the kind of switching to a different country. So with this model, I think it's will make this problem scale better, so we don't have to have each pair negotiating and building the system, but just have the hub that kind of take care of the connection and all the technical detail. So we can focus more on the other things, for example, regulation or some other business related issues. So I think with this kind of model, it would scale better. And I think for Africa, this would be probably the model that you can learn from and maybe can build similar system or even connect to this, so you have a connection to the Asia Pacific also.
That's a very interesting point, having a hub and then pretty much plug and play solution for different use cases. And Femi, I want to go back to you with the question, because you have the most knowledge also on the ground, being from Nigeria. What do you think, how can Africa leverage on the infrastructure which is existing? And because the cross-border is not only international remittances, it's intra-African, right? So I think that's the biggest challenge. And what Vijay was saying is very, very interesting and useful, I think, for Africa, because if you have a hub on the continental basis or the regional basis and agree on some common regulatory and pretty much plug the other countries and solve the problems on the ground, that's pretty much solution driven. So what is your take on this?
Fantastic. I think that's a very good question. I mean, if you look at what we've done in Africa, Africa has tried to template infrastructure with the experience of Europe or maybe the Western world in the first maybe 20 years. But now there are some things that Africa has also perfected in terms of leveraging intra-African infrastructure. And I can divide it into three. So the first one is the ability to use digital infrastructure to reduce costs, applying technologies on like API that interconnects various payment gateway and various payment interparty. I mean, we mentioned EFT and PPAS and all those gateway. What API does, it helps the reduction of that. The other one is also helps in the partnership of telecommunications, financial services, and deployment of fast, robust KYC infrastructure. What that also does is that it removes the mundane and the manual ways of doing things and accelerate, most especially in the year of artificial intelligence and machine learning, to ensure that the time to market and time to solutioning is actually improved. The third thing is that transparency for end users and trust using smart devices and smart portals is also increased. You see things like blockchain technology, infrastructure, things like Web 3.0, and all the various AI component infrastructure as well. All that is coming together. Those three points and many other stuff is actually what regulators are also looking at and improving on their processes so that there's robust interconnectedness across Africa and also synergy of product delivery. So I think we have a good problem in our hands. I think 5 years ago, they used to say blockchain is a solution looking for a problem. But now the syntax is changing. It's actually a problem that's gotten a solution. I think that's what infrastructure would do across payment interfaces in Africa. Thank you very much.
Thank you very much. And now we are moving more into drill down between technology and also regulator. And I want to go back to Sahana. Sahana, what do you think, how viable are blockchain and tokenization for remittances, and given these regulatory complexities? And I would also link this to the other question, which is, especially when the regulatory landscape is very different between receiver and sender country. Like, can you elaborate on that aspect?
Yes, thank you. No, you've touched upon the very heart of the problem, Jill, is that we are dealing with very diverse set of regulatory contexts and even market context, infrastructure context, right? Especially if you look at outside the continent, to the continent, and even diversity within the continent itself. So how does, an innovation happen, take root, and actually stay viable within that, right? I would say that some of the early innovations, especially with blockchain, stable coins, tokenizations, are showing fruit. There are some corridors that are working. And there are also multiple sandboxes that regulators are now adopting, right, as a way to test these innovations. Femi talked about trust. I mean, there's trust that is indispensable with the end customer, but even the regulators in their capacity, need to feel comfortable and need to trust, the innovation that's happening, need to be comfortable on how they're going to, govern it, how it's controlled, what are the risks, and how it's mitigated. So, you talk about viability. I think we're seeing the start of it. I think more examples that we have through corridors, more lessons learned through convening of governments, etc., and more sandboxes that are out there will show proof of the pudding, right? What we always say for fintechs or innovators who are bringing this into market, especially when we're dealing with multiple, regulatory infrastructure contexts, we often say to build for the most restrictive or the most constraining, to make sure that you don't have certain backlashes or sudden stoppage because someone is not comfortable or because it doesn't pertain to or fix with the regulators' objectives. Personally, I think we have seen how costs can reduce, right? With these innovations, like I said in the beginning, from 6 to 7% to 1%, even lesser than that. So it's definitely possible. It's definitely viable at scale. And now we just need to make sure that there is comfort in how it is expanded and that it also is adapted to every market context, right? And I think that's where the focus should be right now in making it viable across borders.
Very interesting. Sahana, you touched also the cost aspect, and with that, I want to ask Bijak about the Thailand, experience. How has Thailand's prompt pay reduced costs for remittances, and do you think this can be replicated somehow in Africa, or do you also think that it has to have some local nuances, and how would you say that?
Yes. Actually, a couple months ago, we just introduced the prompt pay for the we call inward remittance, which is allow people to use the money transfer agent in the foreign country to transfer the money into Thailand. And once it get into Thailand, it's go into the prompt pay system, which is going to distribute it to the bank in Thailand. And that's definitely reduce the costs that people used to pay for doing this kind of things. And also kind of open up a new market and the new use case for us in terms of the prompt pay usage. Okay, but this have two important things that we in terms of technical that we have to consider. The first one is we consider to use the API to do the kind of the communication connection between our fast payment system to the other side. And another thing is the ISO 20022, which is kind of the international standard. Okay, the reason why I kind of stress into these two technology or standards is this make it easier for us to connect because ISO 20022 is like kind of international standard, and also the API is probably the most common way that computers can talk to each other nowadays. So with this standard and common protocol, I would say, would make it easy and for us to implement the system and also reduce the cost associated with the service. Because when we do this cross-border, they probably have, I would say, two models. Okay, the first model is kind of make the money itself to be digital. Could be a stable coin, CBDC, whatever, or like a world currency or something. And then we use blockchain or the chain of that to transfer between countries that kind of connected to that chain, right? So that one approach. Or the other approach is we left the kind of the settlement system in the country alone, and we build extra layer we call orchestration layer that's kind of taking care of the could be real world asset, token, or on one side, and the real time payment system on the other side. And this orchestration is kind of could commonly use a blockchain to orchestrate the transfer between the two sides. So with this many way of doing things in terms of technology, we can see that there are many ways. But the thing that will determine the success or the efficiency of the system is other things. For example, the liquidity provision, liquidity management, or the regulation between countries, because some countries also have the what we call the capital control that kind of restrict some of the flow in and out of the country.
Yeah, thank you very much. Very insightful. Fem, I want to come to you about the topic. Like, as we all know, there is international remittances are a huge part of African economy, right? And if we look at numbers like 20 billion US dollar annually, how do you think, what is the balancing act for fintechs between dollarization and like offering competitive foreign exchange rates? What's your take on that?
Thanks, Veronica. I think Vijay actually helped me to dimension this question very well, because technology will solve what technology would bring to the table, and that must be value. But the question that begs an answer is, what are we solving for? Are we solving for the issues that dollarization has created, or the competitiveness as well? So I see it in like 4 dimensions. Number one, there's always a segment that this addresses the local market. So that's the addressable market. So some things that we need to do is actually promote local currency usage by creating, incentives that drives local currency transaction. So for example, in Charms, what we've done is that we have a digital platform called Kego, and that platform enables us to achieve that in a way, because it's a digital platform, just like the other competitive products in the market. I'm not going to give them free publication, but I know there is a lot in the African market. So that's one way of looking at it. The other one is edging technology that helps us control the exchange for competitiveness, because there's always a lot of fluctuation in the exchange, variables in Nigeria. For example, dollar moves in leaps and bounds of 20 or 50 naira, differentials every other day. So how do you hedge that using technology? Some of these affects multi-currency accounts that allows users to hold and manage their wallet very well. The other thing is also to go back to leverage on technology to reduce costs of complexity. And that's why what Vijay mentioned about the 2 models, using APIs, blockchain, digital wallet, like we have in the Charms Kego, smart API smart, artificial intelligence and machine learning, that helps to create a competitiveness that reduces that pressure on the local community. That is quite important because that is what we're solving for. But if we're solving for international remittances, looking at internal to external as well, that is where the HAFTA comes in, and PPAS, and all these interrelated remittance. How do we make it seamless so that the ability to exchange funds it creates a multi-currency sort of platform that helps to do that. But I think we've not solved the problem yet. We're there, but on a scale of 0 to 10, I think we're at 7. We really want to be at 10 before the end of 2025, so that it's seamless across the entire Africa. That's how I will pack this for now. Thanks.
Thank you. And with this drill dive into more technological aspects, Sahana, I want to ask you about the, there is a huge rise in fraud and scams, also in international remittances. How do you think AI can help us in detection? So we are more in preventive than reactive mode. And especially, like, how do you think that would help us? And then also touching the underbanked population.
Sorry, I had put myself on mute. Thank you very much for the question, and it's very important, right? Because there is a lot of focus on AI and whether it's really helping, and there's lots of controversy around it sometimes. But I think the focus on how much can AI help solve really complex problems like this one. You asked how can it help in this fraud detection remittances. I think AI is being used across the board in the financial sector for different layers, right? The first one is identity, right? You can talk about behavioral biometrics, the device reputation, like how can AI help, link that aspect to a certain remittance, which you all know KYC is super important, when we're handling remittance transactions. And I was reading also about, we talk about tiered KYC, but AI actually helps you have a tiered, risk modeling approach, where you can then mix, a purely system detected, abnormality, but you could also have a hybrid where you can set certain alerts saying, okay, for this kind of case, we think a human intervention is possible because we're not really sure whether it's fraud or not, but it merits a certain check, a deeper check where there's actually human interaction, right? There's also all sorts of signals that can happen with just data. So AI-based algorithms, that help combine different sets of data to kind of assess and benchmark whether a certain transaction is, fraudulent or not. And I think even for communication and how it is explained to a receiver or a sender, and how that instance of fraud is dealt with is also very important. And AI is being used for communications as well, and push and pull messages. So I think we can't downplay the role of AI when it comes to these kind of measures, and using technology along with the AI layer as well. I think will be critical when we are looking at scale, right? Because the more innovative it gets, the more innovative fraudsters also get. So it is a way to harness the AI technology, breaking it into different layers and seeing where exactly it can come into play. And I would also say, let's start talking about enhancing inclusion with AI, because sometimes a standard transaction can look like fraud, but maybe it's just because it's someone that is less savvy that is trying to do the transaction, less digitally savvy, if I may. So let's talk about AI enhancing inclusion instead of excluding, especially when it comes to lower income and underbanked populations.
Yes, very important. And yeah, I can't stress all these points what you mentioned, that also the fraudulence getting more smarter, adopting the technology as well. And I think it's such an interesting phase to find the balance. And I want to go back to Thailand's experience and ask Vijay, how did Thailand Central Bank really balance innovation with the risk when integrating fintechs into its payment systems? You mentioned the hub, you mentioned the centralization, but then Sahana brought all these risks as well coming with it. So what was your take on?
Yes, thank you. To add on Sahana point, another thing that we use to combat with the fraud is the regulations. Not many people like this word, but sometimes we have to initiate some of the regulation to kind of slow down or stop this fraud. For example, we set some limits of the transaction just to reduce the loss, and also we can also like implement kind of the currency because we have currency control, so we can sort of implement those also, right? But going back to your question about balancing the risk from fintech, that always the hotly debated issue whenever we introduce a new system, and when we introduce the new system or the new project, and we said we're going to make this platform open, and the banks is always kind of have some comments saying, well, the bank can be very stable, but this new fintech guy, how can you trust them? So what we did is we kind of have a special like kind of sandbox set up to test the things before it actually happened, and we give them enough time to get all the data, get all the risk event and all that, for the fintech to kind of prove that they are stable enough, or they can join the club of that particular product. So I think our approach have been quite successful because we have many fintech that kind of got out of the sandbox with the new product, and can join, can provide the financial services with the banks. So to make my answer short is we kind of set the special environment like a sandbox to help fintech kind of prove themselves that they can also can join or can provide this kind of services.
It's interesting. So it's kind of you set up the sandbox as a gatekeeper and a phased approach for that. And Femi, I want to ask you, what do you think can digital identity such as biometric verification streamline this KYC AML process itself? Do you think that can be a case?
No, absolutely. I think that's a great question. Because what it actually does is what KYC AML does is helps with verification, reducing, manual checks, helps to automate identity process, so that the time to market for security enhancement and leading to faster onboarding and integration, they improve. And that throws in a bit of nugget of compliance as well into the entire process. So really it does. There's a lot of homogeneous technologies actually in Africa. If you look at East Africa, if you look at North Africa, if you look at West Africa, for example, that is actually growing, and they can be global as well in terms of their projection, because what that does is that the issue around fraud is actually reduced. You can't always curb it, but you know that you have all your ISO processes, and cyber fraud is also on the rise sometimes. But what the KYC does is that it stems the tide of evil, if I can use that word, in the enterprise, and helps to lower risk, fraud of money laundering for businesses. So that in for example, in Charms, we got a whole organization that's called Charm Access, and is dedicated to improving technologies around identity. In fact, let me throw these as a cherry on the cake. The organization I work for received the Guinness Book of Record 40 something years old. So it's a 40-year-old business, but 30 years ago, as the first organization that actually started with the technology of identity. So it's does identity, digital identity across board in institution, in government, and for services. So I think KYC does a lot of that in terms of the automation. It has a place for that, especially biometric capturing. And it will evolve, because if you look at the way smartphone and feature phone has pervaded Africa, it would actually evolve. If you look at things around Kenya, the M-Pesa story in SAFCOM, the MTF story in Nigeria, and things like that, biometric KYC processes definitely has actually evolved. It can only get better. Thanks. Over to you, Veronica.
Thank you. So I would like to ask organizers if we have any questions from the audience. Otherwise, we move towards final questions and round up. Okay, so before we get the questions, I want to ask Sahana about the the final question. I would say is that the World Bank notes remittance fee average 6%, and how can fintech realistically, do you think, achieve this 3% SDG target by 2030?
Thanks for the question, to the topic that's close to my heart. If we don't, even if we just look at alternate accounts or store value accounts, right? Mobile money is one of them. We had this question about price over, a decade ago, more than that, right? Saying banks are not able to scale because their technology is a bit more traditional, less agile, it costs more, for example, license-based model, etc., etc. And then you had a technology that was cheaper, that was lighter, that was more agile. Of course, not as regulated as the banking core banking system, but was able to solve a problem of low ticket value, right? Transactions for a certain purpose in certain markets, and then it was regulated. And that mobile money, story, we know it slashed prices. It was much more easy to open account. It served a certain set of segment groups, etc. And I would take the same analogy now to the remittance world, right? What makes it easier, cheaper, faster to make remittances with new technology that are leveraging, this AI space, digital biometrics, being able to scale across borders without heftiness of infrastructure, but different infrastructure, which is still complex and which still needs a bit of money, but is overall able to slash those prices, overall able to find different models, different business models, different partners around the table. And at the end of the day, it's technological evolution as well that helps to reduce this price. And it's always easier to build for a problem, which is high price, let's make it low, takes 2 to 5 days for a cross-border transfer, let's make it instant. It's always easier to innovate and start from a blank page than to have a 100-page book and say, okay, now how do I, work with this to change it now to have, a one-page flyer? It's super difficult to do. So with those analogies, I hope to have convinced the audience that this is here to stay. We are seeing prices, and we are seeing also innovation being embraced by traditional incumbents, so financial sector, even Swift. The other day I had a very interesting conversation with them. There are initiatives to see how even incumbents can embrace these innovations, and partnerships that allow for new market penetration where the incumbents weren't before, taking a piece of the pie, and at the end of the day, matching, or at least very close to, some of the more let's say, new, and those who are risk averse won't go to the very new ones, right away. But I think there is place for the overall industry to move to this overall innovation, and therefore having the prices come down. Will it happen by 2030? I am hopeful. I think the momentum is there and rapidly moving. I see my fellow panelists also agreeing. So I'm curious to put the question back at you, Jill, about what you think. But I'm very optimistic, very hopeful that we will see this across the board. Remittances is a necessity, especially with the migrant and the political situation these days. And I think it's a basic right. We do need to slash the prices as an industry.
Yeah, definitely. Thanks, Sahana, for asking. And definitely, it's a basic right, and that's such a well said. And I think nothing really happens without partnership, collaboration, listening to each other, talking to each other. And with that, I think ASEAN countries did a great job on the QR payments and linkage model. Sorry. I would like to ask Vijay, do you think the ASEAN model of QR codes would work within African continental free trade zone? Do you think that's something that can be replicated?
Yeah, sure. I agree with you. I think this problem need a lot of collaboration, and sometimes when we collaborate, we have to kind of put the issue of like who win or who loses aside, and try to like work together to reach a goal, which is we can do this as a basic right of the people that should be able to do this this kind of thing. And I also hopeful that all the model that we have studied can be replicated elsewhere, because I think from our experience, the key issue of this is not technology. The key issue is the willingness or the collaboration of the country involved that try to get this thing to work together, and not the technology part, because right now we have so many ways, as I elaborate earlier, to do it, to make the cost go down. But other elements would add back the cost if we not collaborate and try to reach the greater goal together.
Yes, and what gives me biggest hope is that I work with African countries and the entrepreneurs on the ground, and especially entrepreneurs coming from Nigeria. It's like extremely impressive how fast they think and they adopt technology. So at this point, I don't think there is a choice, or do we collaborate or not, because it's consumer driven, and consumer is getting way more and more educated and very fast. With the adoption of AI, it's gonna be even more, and it means that this digital native generation that is consumer now and this future of our adoption of everything is they don't need any teaching anymore. It's basically there, and they are teaching at what they want. They will adopt the solutions, not the problems. And with that, I want to pretty much ask, almost closing because we only have 5 minutes left. Femi, what do you think? Will African fintech lead or follow in the next wave of remittance innovation? But not only. I think this discussion went beyond that.
Fantastic. I mean, that's the cherry on the cake. So should they? Of course, yes. Could African fintech follow? Oh, of course, I think I would say yes. But will they? Now, the jury is out for us to see anyway. But you're right as well, because you said one of the things you're seeing, the momentum and the agility and the force of nature of what is happening within the African fintech ecosystem, especially in Nigeria, in terms of the adoption of technology, things like AI and scripting is like something on dope. So I think what can actually help the the wave of African countries to pivot into new markets, learning from what has happened in Asia, is local acquisition of freshman entry. That helps a lot. Of course, there'll be challenges and regulatory hurdles to cross, mastery of the local market, what market is, in fact, addressable market as well, the borders as well. But in our usual boldness, one of the things that Africa did is to actually embrace instant payment in the financial services. And that has actually led to the credence to the fact that we have strong potentials to actually lead in this. So as I round up, I think the baton is in our hand and we are running with it. Watch out for Africa, Asia, and the rest of the world. Thank you very much.
Wonderful note to complete this panel, which has been amazing and so insightful. Thank you so much. I learned a lot. I would like still to ask finally if we have any questions from the audience. I don't see any questions. Please, organizers, let us know if there is any question. Okay. I think you guys covered it all very extensively. I think we got. Okay. Any final comments to close up? Otherwise, it's been my pleasure, and thank you so much. I think we can do another hour of this discussion.
We need more of this discussion.
It's agreed, Sahana. We should plan another one. But I think we don't have any questions. At least I don't see any. I think we are connected now to the audience.
Any questions?
No questions.
Okay, fantastic. Joe, back to you. I guess they took everything in and you've covered all the possible topics on the subject. Thank you so much for your wonderful discussions.
Thank you. It's our pleasure. Thank you, panelists.
Thank you.
We are done. Because it's echoing.
Oh, I like your closing statement.
Yes, that was really good for me. Thank you for that. It gives hope.
Thank you very much. Fantastic.
Very nice to meet both of you, and I hope we get to meet in person next time.
Absolutely.
Okay.
Brilliant.
Okay, if you come across to Thailand, let me know.
Anoint
Thank you.
chairman of GIFT. And he also had Shahana Arun Kumar, managing director of Amarante Consulting, Dr. Olufemi Oyenuga, group chief digital officer at Mainbridge, and also Vijak Sethaput, deputy director at the Bank